Hey everyone, Jeff Dorman, CIO of ARCA, back again for another edition of That's Our Two Satoshis Live, where we talk about everything happening in the digital assets market. As always, this is not investment advice, but we will be talking about what's going on in the markets. For those who like to read, we also do a blog every Monday called That's Our Two Satoshis, which you can find on our website, ar.ca/blog. So let's get into it. We're now 2 weeks post the election. The week after the election was a clean sweep across pretty much all asset classes. Equities rallied, crypto rallied. Hard to differentiate really if this was just an all-in trade or if it was something crypto specific. Last week, a little different. We finally had a sell-off in equities, down 2% on the S&P, more in the Nasdaq. Gold sold off 4.5%. Oil sold off 5%. Treasuries were lower with yields about 12.5 basis points higher. So, you would think that crypto probably lower as well, only that didn't happen. Crypto continued to rally basically unabated. So, why, right? What's going on here, right? We're in a post-Biden Gensler world fueled with optimism. We have President-elect Trump, who not only is pro-crypto himself, but he's filling the government and his cabinet with pro-crypto appointees. We've got the creation of Doge, the Department of Government Efficiency, to be run by Elon Musk. We have even crypto-friendly agendas coming from previously instated congressmen like Senator Loomis, who just proposed the Bitcoin Act of 2024, which is meant to create a strategic Bitcoin reserve. SEC Chairman Gary Gensler wrote what looks to be a goodbye letter last week ahead of an expected resignation at some point around Thanksgiving. Although, if you actually read the resignation, it's kind of interesting because he took a lot of credit for crypto policy, which many in the crypto industry might disagree with. And we even had many U.S.-based companies who had historically been kind of walking a fine line between fear and confusion about regulation are now throwing caution to the wind ahead of the expected political shift. Coinbase started listing meme coins like WIF and Pepe. Robinhood relisted new tokens listed new tokens and also relisted Sol after previously deleting it after the SEC deemed it a security. Look, there's some real optimism here. Is this real? I mean, it is. Shout out to our friends at Bitwise, who every year put out a crypto survey going to hundreds of financial advisors who represent trillions of dollars in assets, and all the different concerns that people have had in crypto over the years for why they wouldn't invest. One by one, these things have been debunked. Is it too volatile? Do we not know how to value crypto assets? Do we have custody concerns, et cetera? All of these have kind of been debunked with better companies and better firms out there helping people understand that. The one area of concern that not only has not gone down, but has actually increased has been regulatory concern. 60% of respondents in 2021 cited regulatory concerns as a reason for not investing. That number went up to 65% in 2022 and 2023. So if 2/3 of people are not investing in this space because of regulatory concerns, and you start to knock down those regulatory concerns, obviously that's a positive, and the market is reflecting that. So are we running too fast? Maybe. The problem with excitement in crypto is that it's still crypto, and markets tend to go from excitement to euphoria to overheating pretty quickly. One way to look at that is looking at funding rates. So funding rates, looking at perpetual futures, indicate what it costs to either be long or short. So when funding rates are really positive, it means that you get paid to go short because there's too many people going long. When funding rates are negative, you get paid to be long because too many people are shorting. Funding rates got really heated last week, sometimes in the 50 to 100% annualized rates. That wasn't an example of overheating, and we saw a brief market sell-off, which reset the funding rates, and things continued to go higher. We also saw stablecoins starting to trade at a premium. Tether, for example, was trading above $1 for most of last week. That rarely happens, right? Because obviously, if Tether is trading above $1, you can just create new Tether at $1 and then go out there and sell it at $1.01 or whatever. The reason trades for more than $1 for an extended period of time is because so many people were coming into the market trying to get into stable coins to then go ahead and buy other crypto assets, that there was more money coming in than there were arbitrageurs able to keep that price back down to $1. So, you can see that this is not just excitement and hope. There's real action happening, right? There's real money coming into the space. There's real excitement about what's going to happen here in this post-Biden, post-Gensler world. Perhaps the most interesting development last week within crypto is just the dispersion in prices. So even though the total crypto market cap is now comfortably above all-time highs, over $3 trillion, not every token is rallying. In fact, in our coverage universe that we look at ARCA, It's about 450 tokens with 100 million market cap or more. Only about a third of those are even higher year to date. So, if your token is out of favor, it is severely out of favor. The majority of the market is still lower year to date. And as a result, we're starting to see real dispersion happening in different assets. And we saw kind of a clean sweep, I guess, in the first week after the election, with DeFi maybe leading the charge. But now we're seeing a much sort of more selective group of tokens rallying at different times. Maybe newer is better is sort of the investing mantra right now, since a lot of the older assets are not performing nearly as well as some of the newer, Solana-based tokens and base tokens. And really, we're not even seeing like a clean rotation. Even back in 2021 in the bull markets, you saw like a real rotation. First, it was DeFi rallying, then it was gaming that was rallying, then it was like Web3, like file storage, things like Arweave and Filecoin that were rallying, and then you got into meme coins, and then eventually Soluna and some of the layer ones. It was really a kind of an organized shift. We're not seeing that as much right now. We're seeing a much more kind of eclectic group of tokens that are rallying at any given time. I mentioned some Solana-based tokens, some base tokens. Last week was actually really weird. It was essentially a list of really old tokens that have no real functionality and have kind of been left for dead. I call them zombie tokens because periodically they rise from the dead. But things like Stellar and Hedera HBAR and XRP and Algorand and Cardano, like these are projects that tried to do real things at one point, kind of failed, but the tokens don't really die, right? There's no bankruptcy here. And you're seeing these are the kind of tokens that are really rallying here, which is sort of interesting, right? I mean, most people in crypto would argue that these have no value, even worse than meme coins. At least meme coins are kind of fun and are meant to be silly. These were real projects that failed. But for whatever reason, these are now rallying. So you're seeing a lot of different assets move in different ways. Maybe this is because people logged back into Coinbase for the first time in a few years and just went back to buying what they already know. It's hard to know for sure. But what we know is that these sell-offs right now are shallow, right? Every time the market tends to sell off a little bit, the bids are right there. The Bitcoin ETF, the Ethereum ETF are well bid. Solana and everything in its ecosystem is incredibly well bid. Some of these newer tokens are well bid. So, we'll see what happens as we kind of move into the rest of the year. But certainly a positive sign that crypto is not necessarily just following equities and the rest of sort of the macro world, really starting to trade on its own with new excitement. One indicator we look at is both Coinbase and Robinhood were number 1 and number 2 respectively in the App Store rankings in terms of downloads and usage. So these were that's what we saw back in 2021: heavy usage, heavy trading of these apps. Over the last couple of years, these were in the 30s, 40s, and even 50s in terms of the App Store ranking. So there's definitely excitement. There's definitely activity going on. And as a result, that's going to lead to more positive things. We're going to start seeing new token launches again. We're going to see things like fee switches and other tokenomic changes. We're probably going to see a lot more announcements and events. So I think this is an environment for people to get back into digital assets and at least be paying attention again to some of the news and some of the innovations. One of the things we're watching carefully right now is there's a real big wave of sort of AI-inspired tokens, basically people launching their own AI agents and letting them loose to run Twitter accounts or to launch tokens or to invest in other projects. So a lot of experimentation. That's really what crypto is known for. That's, in my opinion, when it gets fun again, when there's a lot of innovation and a lot of experimentation. So we'll keep you updated on what we're seeing, but certainly a healthy market and healthy signs that we're seeing so far. So that's it for this week. Appreciate everyone joining as always. You can always follow us on Twitter at ARCA. You can follow me at jdorman81. And of course, we encourage you to go read the blog and see some of the charts and graphs we put in there on our website, ar.ca. Thanks, everybody. See you next week.